Well, when you look at when you're launching a company, right? Like usually the first place you're going to get money is what we call the FFF, right? The friends, the families, and the fools. So these are people that are very close to you that are going to give you a bit of money, maybe an uncle or your parents or friends that have a bit of money, and it's very very small amount of money. Usually just enough for you to sort of get off the ground. And if you have any kinds of signs of product market fit or any signs that this might actually have some legs, then that's when you start talking to, typically for a seed round, you'll be looking at angel investors. So these are people that you probably don't know, but are ready to write checks, anywhere in between, talking 50K to, a big round might be $750,000. And so these people are investing their own money, right, into businesses like yours. What we've seen in the past is obviously companies like Real Ventures that are focused on the early stage seed fund. So typically the institutional money, the VC money, was usually much more focused on later stage rounds, so the A rounds and up. And with the trends of in the market of open source and collaborative work and just the reduction of costs in general to launch companies, it takes less money to get some traction. So these VCs like us are coming in earlier, investing at a much earlier stage with smaller money. And what you do with your seed round is take as little money as possible and prove something, get some traction in one area, prove this one thing, focus on something very narrow. And once you've nailed that and you go back to more investors looking for more money in order to prove your next step, your next milestone. So rather than raise a whole wad of cash like it used to be in the old days where you raise $3 million, $4 million out of the gate, you're raising $250,000 to $750,000 in order to prove something very specific, and then you go out raise in much better terms for you, which means you keep a larger portion of the company for yourself. So that's sort of what we're seeing now in the space.